Ladies and gentlemen, welcome back to my big short trade idea. And this big short will most likely happen next week if everything goes as per plan. And that's why an update video is needed. An update video from which video? Well, let me show you quickly again if you're not up to date, if you didn't get the memo here. My big short will happen in 2 months. Here's my full trade strategy. And obviously I did this video 2 months ago. And this is part 1. And if you haven't watched part 1, then it's obviously time to watch part 1 first before we now dive into the real trade idea to understand why we are, or why am I so bullish on the Mexican peso. All right. So it's the Mexican peso election cycle. So we are planning to go long the futures, or in other words, short the USD Mexican peso, the currency pair, because the currency pair in the Forex market is the inverse pair of the futures. But as always, as you know me, we have to analyze the underlying asset, which is the Mexican peso futures. So that's why here it's the inverse pair of the currency pair in the Forex market. So here we need to go long in the futures market and short in the Forex market. So we're gonna go through now my 2-step mechanical process. As you know, we start with the fundamentals because we have to get fundamentally biased to get into any trade. And you have seen that on the USD Swiss franc, you have seen that on silver and on so many other trades that I called for you guys here on YouTube. And we're going to look at the retail CUT data first. And this is the raw data, and we're going to look into the index in a second. But we can see already here on the, obviously, Mexican peso weekly chart that the retailers are here right now, and they are, compared to their previous behavior, they are already getting very, very bearish. Again, I want to stress, this is not sentiment. These are real positions in the market. So they are positioned short in the market. So now the question is now, how bearish are they compared to their previous behavior? And therefore I need to look at my index, because this is way more important than just to know, okay, they are bearish. No, I want to know how bearish they are compared to their previous behavior. And you have seen that on the silver chart, on the silver trade, and on the USD Swiss franc trade, how important this data is. Because we want to trade, first and foremost, we always want to trade against the retailers. We don't want to do what the retailers are doing. And if I look at here my Campus Smart Money Index, and I put in here the data, how I can look at the weeks, the look back on the weeks, because here I entered 26, which means basically I'm looking 6 months back and want to see if they're in a 6-month extreme. And you see here, they're down here, they're below the red line. And if they're below the red horizontal line, it means they are in a 6-month extreme. So that's great. So they are already in a 6-month extreme. And the last time they were in extreme, you see basically here, we got a nice rally here as well. You see, we got a nice rally here as well. Look at this here. We got a nice rally here as well. Look at that one here. They were in an extreme. We got a nice rally. Look at this here. We got a nice rally. And by the way, again, 2020, look at this, Corona, and they were super bearish, and we got this nice rally. So as you can see, once they're in a 6-month extreme, we might get a nice rally. Although, again, it's not a timing tool, because timing we do with the technicals in a second. But I also want to see, hey, we're in a 6-month extreme. What about 1 year? Now, let me just quickly add 1 year, just to see if we're also in a 1-year extreme. You see, we are also now entering a 1-year extreme on the Mexican peso. That's great. Now, I'm going to look at 2 years. And wow, we are getting even in a 2-year extreme. So you see here, we were already in a 2-year extreme beginning of 2024, but before that, the last time we were in a 2-year extreme was basically Corona, and this was when we got this massive rally. So that tells me quite a lot. And now I look at 3 years because that's the maximum. If we are already, you see, we are heading close to, we are not yet in a 3-year extreme, it doesn't matter. But if you're also in a 3-year extreme, as you have seen on silver, well, then you can expect a monster move at some point of time, because here you see Corona 3-year extreme. This is when we get the bottom of all bottoms here. And also here we got a 3-year extreme just beginning, or not beginning actually, in October 2023, and this is when we got that bottom. But we are in a 6-month extreme, we are in a 1-year extreme, we are in a 2-year extreme. So that's all amazing. This tells me the retailers will be absolutely wrong. So now let's go back here let's go back here and look at the 6-month extreme. So now retailers are already heavily short, which tells us, hey, we have to be bullish on the Mexican peso. But I have 2 more tools to look at to get like my confirmation here. And we look first at our forecasting model here. And the forecasting model you see here basically is telling us now tomorrow is Monday, the 10th. So the 10th here, you see here we might go a little bit up, then maybe a little bit lower, and the bottom of all bottoms is around the 14th. Obviously, you cannot go exactly by the date, but you see here what is really more important than in this particular week. You see here we going to make a bottom, and then we see, based on our forecasting model here, we see a nice rally or rise in price. Actually, you see here until August, mid of August, you see here basically 2 months of not necessarily a rally, because we're gonna see some tops and some bottoms here as well, but we're going to make the bottom now around the 14th, 15th, 16th, whatever the date is, but it's around that time frame. And then we see the ultimate high around mid of August here. So the forecasting model is in line with the opposite of what the retailers are doing. So that's the second rule in place. Now the third fundamental rule is our valuation model versus the US dollar, because here we are pairing Mexican peso versus US dollar. So obviously the valuation versus the US dollar is really important, whether we are undervalued or overvalued, right? So we have to be obviously undervalued to go long the Mexican peso. And guess what here? We're looking here at long-term valuation. I can also, by the way, just to show you here my length, how many candles I can go back here. I can switch between short-term valuation, long-term valuation. Obviously, if we are long-term undervalued, we might be short-term undervalued as well, because after that big drop, we are just undervalued versus the US dollar. It just makes a lot of sense. But also here, long-term, we are undervalued. And look at this, what happens. Again, I want to showcase you what happens in terms of quick back testing. What happens if we are long-term undervalued here versus the US dollar? Look at this. This is where we made this huge this wick where we dropped big, but then because we were long-term undervalued, we made a nice bottom and then we just rallied. You see here, long-term undervalued here as well. And every time we are long-term undervalued, we are getting these here close to long-term undervaluation, and we're getting these nice moves. And look at this here as well. Close to long-term undervalued, we are getting that. Here we are long-term undervalued, we are getting this nice rally. And look at this here, we just touched long-term undervaluation, we get this nice rally. Here we are long-term undervalued, we are getting a nice rally. Here we are long-term undervalued, we are getting a nice rally. Look at this, long-term undervalued, we are getting a nice rally. Oh, and look at this, long-term undervalued, we're getting this nice rally, and I could go on and on and on and on. So what this tells me is, once I'm long-term undervalued, I might hit a bottom. So again, I went through my 3 fundamental tools to see if I'm getting biased into that market. And what we can clearly see is that, hey, Retailers are positioned short. Perfect. We want to do the opposite. Forecasting model is telling us we might make a bottom next week. Perfect. Rule in place. And on the last tool, our valuation model, you see we are undervalued long-term even versus the dollar, and this also tells us we are getting a bottom. So 3 out of 3, extremely biased. So that's why my fundamental rules are met. So that's why I can go into my step 2, which is basically the market timing with technicals. And I'm going to use supply and demand. And by the way, right, we have also president elections here, or we had president elections, and this trade idea is also based on Mexican president elections, as you have seen in episode 1 2 months ago. And now on the Mexican peso, on the technical. So just quickly here, I have here down here to the right, I have the Forex pair, because obviously we're going to time it on the inverse Forex pair. But I have here on the left side, I have here the unadjusted chart, the unadjusted continuous chart at MP1 equals 103x. And again, I've seen a lot of comments in the on my previous video where you are requesting for me to do like a video on the unadjusted continuous chart. So it's on my agenda in the future 100%. So I will do some videos on that. And here to the right, I have the adjusted continuous chart at MP1. Now, first of all, you see, and I highlighted that in my first episode here, we are basically getting into that level on top of level here. So the first one hit, you see here a couple of, weeks back, actually 2 months back, and now we are coming close to that level on top of level, to that distal level here on the unadjusted chart, which is perfect here. That's what I want to see, right? And also you see how the chart looks different, how the chart looks just different. You see on the adjusted chart here, on the adjusted chart, what is really important to see is that this level is basically the level on the unadjusted chart that we already penetrated, that we hit, and that we might breach. So here on the adjusted chart, that's the level that I'm looking for now as well, because we haven't hit that level just yet. All right, so you see what is really here important is that on both charts, the unadjusted chart, we hit the level, and on the unadjusted chart here to the left, and on the adjusted chart, we are going to hit that weekly supply zone. So please bear with me, because you see here, which is really important, we are trying here, quote unquote, we are trying to catch a falling knife on the Mexican peso, which is not easy. So we are again trying to time the bottom of all bottoms, and this requires a lot of skill. Does this always work? Obviously not. It's not about having winning all the time. It's about always risk to reward ratio. Again, I want to stress, not every trade can work out as per plan. So that's why we have to do proper money and proper risk management. All right. So just to keep this in mind, that you don't bet your house on any trade that I'm calling on any trade in general. Now, you see here, that's basically the level, and you see where we can enter this level is basically now, the chart that looks a little bit nicer for timing purpose is here at MP1, the adjusted chart, because also here you see the level is a little bit smaller, it's a little bit tighter, and I want to time it here on the weekly, because again, we want to have like the daily covered by the weekly. And I can make here also a full screen and show you that it's quite difficult. I want to first do snap mode, because snap mode is here really important. What is snap mode? That I'm really tied to the candle here exactly, that I have the precise entry here, that the line snaps basically to the bottom of that wick and to the top of the body of the basing candles. That's my preferred version here on the Mexican peso weekly zone. And if I go quickly to a daily chart here, what you see here is basically you have a level here that starts here. So we are getting a little bit deeper inside that area, and you have another level here. So you have that drop base rally followed by a rally base rally. So it's an overlapping level on top of level. What I'm just doing basically here is combining both levels, trade the, you see here, get a little bit deeper entry and use the whole weekly chart for timing. Again, we are trying to catch a falling knife, ladies and gentlemen. We don't try to be like exact, precise sniper mode entry. We give price a little bit of leeway, wiggle room to move around. And by the way, this trade is also what I would consider a carry trade, because you have positive, very big positive swap. So we can stay in this trade a little bit longer, and we can make passive income with like this being a carry trade. Now, so that's on the daily. So you see the daily is clearly covered by the weekly. Super important. Again, big brother, small brother technically is met. So this is what I need to see. And now, well, again, you can do your due diligence yourself with target setting, because it's quite simple. Again, we are very mechanical. So 1 to 1, 2 to 1, 3 to 1. We can all add these lines, and you see here, this is a 1 to 1, 2 to 1, and 3 to 1 here. But what I want to show you, again, I quickly go to the daily because this is where I saw it. So you see here, this is that gap. And I think this gap, I'm sure I'm only seeing that in the, I'm not sure 100%. So let me just quickly minimize that. I want to I minimize this one here as well. Just want to see quickly on the USD Mexican peso here, the Forex pair. I'm just doing like daily. Yes, I don't see that gap on the daily, which is great. So I don't see that gap on the daily as on the Forex pair. Again, this is stuff, that's why futures are so important. This is where you see details that you will never see on the Forex pair. So this is very unsustainable. So this gap, this overnight gap, will get filled very, very likely. Again, nothing is for certain. It's not that something happens all the time, but again, it's about probability. And if you look at that chart, you don't see any kind of unfilled gaps. And you see basically also, look at this here. We had this gap here, and look what happened. It just filled that gap on the futures, and then we continued higher. And where I just quickly saw that as well is somewhere here. Look at this. Here also gap, we filled that gap precisely, and we continued higher. Whenever you see these unsustainable gaps in the futures, they're very, very likely to get filled rather quickly. Now, you have that huge monster gap, and that's where I would expect price now here on the futures go down here, and then you can place a 1 to 2 target here, for instance, right? This is where I would say, okay, once we filled that gap, this is your first profit that you can definitely take. Now, on the Forex though, on the Forex, let me put these charts next to each other. So again, you see the futures is super clean. The chart looks super nice, very easy, quote unquote, easy to time, because of the level structures. And you see now the Forex, the weekly Forex chart is the inverse, but here it looks even a little bit different. You see here on the Forex, the level that we are going at, I do like the futures again on the weekly chart to just compare it for you. That's the level. You see on the Forex, we are going through that level. We preached that level already, almost already. So we are going through that level. In the futures, we haven't even reached that level, which is, you see, the power of futures. So that's the level that we want to go, that we want to trade. In the Forex, the level just didn't work, right? If you just timed that level based on supply and demand, and that's also a teaching point here. If you traded that level based on supply and demand relationship, just because it's a high quality level by itself, but a level by itself doesn't mean anything if it's not backed by fundamental tools and not backed by the futures chart. So that's why the level just, and you might wonder, why did this level not work? It meets all the rules, it's a high quality supply zone. Yeah, but guess what? Fundamentally it's not backed, and also it's not backed by the futures. And now you see the level here. It's basically this one, the big one, but we're gonna go down to the daily, because on the weekly, on the futures, it looks just much better. So it's basically here the level, right? It's basically here. So for me, it's clear here what I'm going to do. So I'm waiting for the futures. I'm waiting for the futures to hit that level. I'm waiting for the futures to hit that level. And then I'm willing to also enter the Forex pair. But only once I basically here enter into the preferred version. This could be even, you see here, a little bit deeper, I guess, here, because it's hard just to, because it's the opposite, it looks different. So most likely it's closer to this one here. So now, not to be covered by my webcam here. So that's the short here that we want to take, or the long in the futures. So ideal scenario is we wait for the futures to get into that preferred weekly demand, and then the Forex has to be in that, or it will be at the same time in that daily level on top of level supply, and then we can short this pair, or in the futures go long this pair. All right, ladies and gentlemen, that's the Mexican peso. Fingers crossed that we are getting filled, and fingers crossed that it's going in our way. Again, don't bet your house on it. It's just another trade. It's just another trade in your trading career. Nothing special about that. Do proper risk management, do proper money management, and let's see if this is going to work out. Fingers crossed. Good luck, and talk to you soon.